Well, hello everybody. Here we are, the last month of 2024, and the Calgary real estate market is finishing on a little bit of an uncertain tone right now. We're seeing a lot of mixed signals in the market. The news articles are all over the place, leaving buyers and sellers wondering what is next year going to look like. Well, I'm going to dive deep into what's actually happening out there and give you the intel that you need to know to make your real estate decisions. So let's go ahead and jump right into it. So first up, the construction side of the real estate market is not looking so hot right now. We're seeing lots of stories about pre-construction sales falling dramatically. Most of this stuff is from the GTA, but we're certainly seeing it in Calgary as well, where we've had 61% less sales in the third quarter of this year than we had last year. And Montreal and Vancouver are declining too. And the general consensus is that these investors are not coming back until there's this expectation of further growth and appreciation in both the sales market and the rental market for them to sell back into. So I'm very bearish on pre-construction condos, and anybody investing in that space needs to be careful. It's because we're seeing projects not do so well right now. We're coming to the end of this construction boom. At least that's my read on this right now, where you're seeing firms like these guys, a $1.9 billion fund that's basically said, we're not paying out any dividends anymore, and you can't have your money back if you've invested with us. So not a good look for that group there. And same thing here in Surrey, a big condo project that's now stalled, where they don't have enough pre-sales to hit their next level of financing, and now the ownership group doesn't have the equity to continue, and the project goes into receivership. So that, in addition to lower sales prices, buyers are getting tapped out. They can't qualify for these really high purchase prices on new construction stuff. And so that side of the market is not looking very good at all. And you can see here why that is. It just costs so much to build in these markets. The land is really expensive. The materials and the trades are expensive. But for Calgary, we still have our affordability advantage here. It's nowhere near as expensive to build here as it is in some of these other markets. And so because of that, I do feel that we're not going to feel it quite as bad here in Calgary as other markets in Canada are getting it. So in terms of overall affordability, what does this mean? Well, RateHub is a good resource for this. What they do is they look at the prevailing rate of interest and the purchase prices for real estate in markets across the country. And then they put together these tables, which I know is impossible for you guys to see. So I've just summarized it here in terms of what it actually is. So you want to buy in Toronto, you need just under 200 grand. Vancouver, you need a household income of 215. But in Calgary, you're almost $100,000 a year less than that at a household income of about $113,000. So Calgary is going to be safe from, a bubble popping like you might be hearing about in some of these other Canadian markets, because we're so much more affordable, and more on some of that later. Okay, in terms of population growth and changes and what's forecast for next year. So usually it's next month in January, early February, where you'll start to see all of the real estate experts and all the analysts and think tanks out there coming up with their market predictions for 2025. So we're not going to dive into a ton of that this month, but we are starting to see some indications of what we can expect next year to look like. You can see here, this is from ATB, where they're forecasting the population growth for Alberta for next year. So it's down considerably from what we've seen in the last 2 years, but we kind of knew that wasn't going to be sustainable. But they're forecasting a 2.5% population increase in Alberta for 2025, which is basically the same size as Lethbridge, which is a more than healthy. That's a really good figure for our market. In fact, you'd have to go all the way back to 2014 before you would see anything anywhere near that. Throughout the whole recession and downturn, we were very, very light on our population growth. So that's still a great number, and is one of the reasons why I feel, Calgary and Alberta are going to be okay. And our affordability is a big picture, a big point of that. But there are some trends within that to notice, okay? So where is that population growth coming from? Well, people are immigrating to Alberta at much higher rates than they're leaving our province right now. But look at this forecast change here, okay? In terms of net non-permanent residents, all right? So this is a direct impact from the changes in immigration policy that we've seen at the federal level, and a huge drop in terms of non-permanent residents that we're seeing, but still very healthy interprovincial migration. So this this is that, balanced market type of dynamic that we're in right now, where, we're getting bad news in terms of overall population growth with respect to immigration to Canada, but people are still moving to Alberta from other provinces because it's so much more affordable here and the economic prospects are really good. So Alberta and Calgary are going to be a little bit different than what you're hearing on the national scale, but we're not going to be immune to some of the trends that you're seeing out there. Okay, and that's going to affect the rents, right? So we've got less non-permanent residents here. They typically rent when they come to Canada. They can't buy if they're not, if they're not a resident here. So they're renting. So there's going to be less in them. We're going to see rents affected this way, and they've been declining now for 6 months in a row. Okay, so that's also going to hurt the economics for anybody in the pre-construction space, where if they're looking to buy a condo unit, they need healthy rental income numbers in order to be able to get into that. So this is going to create a little bit of a challenge for them, and is another reason why I think you should stay away from pre-construction condos in our market right now. So what about the stats? All right, so let's actually dive into the sales statistics that we saw here. So last month, the average sale price in Calgary was around $592,000, and this month we are down again. Okay, this is the 5th consecutive month now where we've had a declining overall sales picture. So we're still up 3.5% year over year, but that's a very modest increase compared to what we've been used to over the last few years here in Calgary. So we're under 590,000 now. Now what we're seeing with sales and new listings, this is what we would typically expect at this time of year. It's one of the slowest times. So yeah, sales have come down, but we're up still a little bit, around 1 percentage point from where we were last year. So we're largely in the same place in terms of transactions that we were in 2023. Now, if you look at the trends here, this is where you can start to get a bit of an idea of what it's going to look like as we turn the corner into 2025. So you can see here now, we've had 5 months in a row of declining average sale prices here in Calgary, okay? And in fact, we are now down $20,000 from the peak that we had earlier this summer, okay? We're at 588 now, basically at 608 is where we were in the summer months. Now, when we get to the year-over-year picture, and we look at the year that was in 2024 numbers in January, we're still going to have a pretty high overall sales growth, because this is, if you look where the pricing is high, those are also the same months where we had the most sales. So the sales volume is going to pull the average sale price up a little bit, but you can see here the trend is definitely slowing down, all right? Other than this little bump that we had here last month, which kind of was against the trend of declining sales and prices, we are seeing a pretty steady pattern here of pricing coming back down, where we're basically now at 580,000, very close to where we were in February of this year, okay? And that's just this overall sentiment now of buyers feeling a little bit tapped out, interest rates coming down, buyers wanting to know how much further are interest rates going to go down now, and just this sort of general unease at the federal level. When are we going to get an election? What's going to happen there with the economy? So I think all of those things are just kind of contributing to a little bit of a real estate hangover for us in the last half of the year here in 2024. But these drops in pricing and sales are not so dramatic as to give me, a bad feeling about next year. I still think we're going to have some growth in our year next year, but it might not be as good as we've seen in years previous, which is still not necessarily a bad thing. Okay, so are we in a buyer's market or are we in a seller's market? And what's the deal with this? All right, so this is a very rare time in the real estate cycle for any major market, because generally speaking, you're usually on one side of the fence here. Either you've got a strong seller's market, which is what we've had for the last 3 years, or a strong buyer's market, which is what we had throughout all of the downturn. Very rarely will you be in this either sunrise or sunset kind of position where you're bumping in and around a balanced market conditions. But that's basically where we're at right now. We're from the middle of spring all the way through till the early fall. We were getting more and more towards buyer's market territory, and we actually creeped over that 2 months ago, dropped back down last month, but have now come back up to essentially even market conditions. Okay, so that's the overall market and the data that we're seeing for the overall market. But because we're in this balanced market condition right now, you have to dig in a little closer and get out the microscope for some of the unique data points to really get an idea of what our market's going to be like next year. Okay, and so this is one of them that I like. So the Calgary Real Estate Board will also provide months of supply metrics, not only for the overall market, but they'll do it for asset classes and also by community. All right. So you can see here the overall apartment months of supply is very solidly in buyer's market territory. Okay, this is why you got to stay away from pre-construction deals right now, because it's already a buyer's market and these units haven't even been built yet. It's 2-3 years out for some of them. Okay, so these apartment numbers at 3.5 are carrying the whole average up and making it look like we're in an even market condition because they're so high. But all of the other segments are very solidly in seller's market territory, just barely in seller's market territory. But for this time of the year, I don't think that that's such a bad thing. And it's these metrics here, 2.1 for detached and semis and rows at 2. This is why I think as soon as we turn the corner next year and get back into the spring market, if interest rates come down just a little bit, we're going to have momentum and we're going to have another growth year, just a bit more modest. Okay, so the big bars here will show you by community. So if you're in the Northeast, the condo market there is basically the same as it was in the downturn. All right, there's just been lots of units that have been added there, so you should be out there looking for good deals and getting a good unit for what you want to be. So that would be a good indication. But if you're looking here, the West and even the downtown, some of those markets are still a little bit in seller's market territory. Okay, so you really got to look closely about the area that you want to buy in and the asset class that you're shopping in to understand what you're going to be running into as a buyer or as a seller heading into 2025. Okay, now you can also do this for price points, because that's another point here that we want to be looking at, the affordability picture. And you can see here that for the most part, we're in and around a 2 months worth of supply market condition. Okay, so between 300 to 400,000, it's up at 3 months worth of supply. That's because this is where most of the condos are, just in terms of the pricing. They fall within this range, so that's why that's so much higher. But if you look over here, the total months of supply for the more expensive stuff, then this would be your suburban homes, right? Your 3-bed, 2.5 bath, front attached garage. You're going to be up here in seller's market territory. You're under 2 months worth of supply. Okay, and then if you look here, 700,000 to $1 million. All right, now this is a graph that I wish Kreb would just loosen up a little bit, because each of these little bars are representing a $100,000 difference in sales price, but this one is 300,000. All right, so that's why it looks like there's tons of sales here, but it's just underneath balanced market territory, barely in seller's market territory, and that's a good sign. All right, that the expensive part of our market, where the nicer suburban communities and all that, still very healthy, still very even, and should be a much better experience for buyers heading into next year than what we've seen. Sellers are going to get good money for their properties. They've seen good growth here, but they're going to have to price themselves much more realistically. They can't just go and look at what the last house sold for and ask more than that because we're in a growth market. No, that's not the case anymore. You're going to have to be more competitive, and trading up or trading down is going to be a little bit more tricky, simply because we're more in a bit of a balanced market condition. Okay, and then if you're shopping in a $1 million+ range luxury segment, it's a buyer's market out there if you're north of $1 million. Okay, so all of that kind of taken together gives us a few things to look at heading into next year. There's going to be lots of talk about, you're going to have to break into specific market segments and pricing to really know what type of experience you're going to have as a consumer in the Calgary real estate market next year, but it's going to be a ton of fun. All right, so this is our last video here for 2024, and I want to thank all of our awesome clients, all of our followers here on the channel. Redline has had a good year. I've really loved working with you guys. Our agents have had a good year too, and we couldn't be doing it without you guys and your support. So if you got something on your mind about buying or selling here next year in 2025, definitely reach out to us. We'd be happy to help you guys out. Thanks very much for watching, and we'll see you in the new year.